Good morning and good afternoon. Welcome to the June 2022 DTN WASDE webinar. My name is Andy Miller with DTN. I'll be your moderator today. And with me as always is Todd Hultman, Lead Market Analyst for DTN. Some quick housekeeping items. During the event, all participants will be in listen-only mode, but we certainly encourage you to ask questions at any time during the event. To do this, click on the Q&A section located in the bottom right of your screen. It'll open up a panel, and then you can go ahead and type in your questions there and send. We certainly do encourage you to ask questions at any time during the presentation, and we will circle back around to answer them at the end. And just a quick reminder, we record these sessions each month, and the rebroadcast will be placed on the DTN website within the next 48 hours business time. So that would probably be not necessarily on Sunday, but within the first couple days of next week. And just a reminder, our address is dtn.com. So pretty simple. So I think we're ready to go. Todd, I'll stop talking and I'll let you take over.
All right. Thank you very much, Andy. Welcome everybody to our WASDE report here for Friday, June 10. We'll be going over the details of the report here and not only looking at what the USDA said, but also comparing that to what the market's actually doing. Just to start us out here, we have corn slightly lower on the day, down 3/4. Soybeans are down 18 1/4 in the July contract, and most of the wheats are 1 to 9 cents higher throughout. So fairly quiet response, a little selling in soybeans, but that was actually there before the report started. This June WASDE report typically is not a big market mover, and I would say expectations were fairly low for today's report to be much different. We do obviously have a lot of events in the world that are causing us a lot of anxiety. We got a new inflation report from the Labor Department this morning that said consumer prices were up 8.6% from a year ago. The stock market is taking a hit today. Related to that news is inflation, and more specifically rising energy prices really remain a big concern. So with a lot of things going on in the background, let's take a look at how USDA viewed today's report. We'll start with the corn numbers. This is the U.S. balance sheet for corn. The farthest right column is today's estimates for the new crop season. And before we get to that, I want to direct your attention to the second column, which is the current season that we're in. That's 2021 to 2022. This season will end on August 31st. And as you can see by the rectangle at the bottom, USDA increased the ending stocks estimate there 45 million bushels. It's now 1.485 billion bushels is USDA's ending stock estimate. There was really only one change that brought this about significantly, and that is there was a 50 million bushel reduction in USDA's export estimate for the current season. So we've seen corn shipments close to their estimated pace, but the total sales commitments just have not been there so far. And so with less than 3 months to go here in the old crop season, USDA chooses to reduce the export estimate on corn by 50 million bushels. There also was a tiny increase in the food, feed, and industrial category of 5 million bushels. So that accounted for all the changes in that old crop season. You can see also there USDA's average farm price for the current season is estimated at $5.95. Obviously, that's a price that's still trying to catch up to the big gains that we've seen in the corn price this year. Now moving our attention to the far right column, the new crop season estimates, and basically there's only one tiny change in the new crop estimates, other than the fact that the carryover is going to be 45 million bushels larger because we just increased the ending stocks estimate for the old crop season. The tiny increase also is in the food, seed, and industrial category, a 5 million bushel increase for the new crop season. That's the red arrow you see there, and 6.82 billion bushels. So virtually nothing about either the production estimates or the demand estimates really were changed for the new crop season, other than the beginning supply total increase. So our new ending stocks estimate for the new season, which is just emerging recently is 1.4 billion bushels, and that has an average farm price estimate of $6.75. Both the old crop ending stocks and the new crop ending stocks work out roughly to 10% of annual use. So that'll be a ratio that we'll mention again here shortly. So not much change there, just a small increase in ending stocks basically from that 50 million bushel reduction in the export estimate. Let's move now to the world table. And first of all, keep in mind that we're working with two crop seasons here, and South America's crops, and right now Brazil is growing their second corn crop. That is still happening in the 2021 to 22 season. The next table will show will be the new crop season, which is geared more for the northern hemisphere. But in this old crop season, we see Argentina and Brazil crop estimates both unchanged for the month. Argentina expecting a 53 million metric ton corn crop, and Brazil's estimate staying at 116 million metric tons on USDA. Now, Brazil's crop agency, CONAB, came out with their own estimate of Brazil's corn crop or production just a couple days ago, and they estimated that crop at 115.2 million metric tons. So just slightly lower, but really fairly close to what USDA is also saying. The upper right corner where the arrow is shows an ending stocks estimate of just under 311 million metric tons. That's up roughly 1.5 million metric tons from the previous season, just a small incremental change. Now we'll move to the new crop season for world corn. And let's start in the upper right-hand corner. And we see that the estimate of world ending corn stocks increased from roughly 305 million metric tons up to now 310.4 million metric tons. So basically a 5 million metric ton boost in the world ending corn stocks estimate. Where did it come from? Well, the answer is Ukraine. If you look at the rectangle around Ukraine at the bottom, you'll see that the production estimate for Ukraine was raised this month from 19.5 to 25 million metric tons. So a 5.5 million metric ton increase for production. However, if you notice, I stretched the rectangle all the way to the second column from the right. That is the export total column. Even though USDA estimates a bigger crop grown for corn grown in Ukraine than they did last month, the export estimate stayed unchanged at just 9 million metric tons. So obviously, considering the war events, this is very difficult to make estimates about Ukraine. It's a fluid situation. They're still fighting for their life over there and having a very difficult time. So there's a lot of uncertainty ahead, but this month USDA choosing to increase the crop estimate, but not the export estimate for Ukraine. The rectangle for Brazil and Argentina shows that those crop estimates for corn stayed unchanged in the month of June. We've got a 55 million, 55 million metric ton estimate for Argentina, 126 million metric ton estimate for Brazil. Keep in mind those crops are still a few months away from even being planted, so there's a lot of uncertainty when it comes to the southern portion of these world estimates. World corn supplies. I think it's important, given the fact that USDA is still estimating an 8 billion bushel surplus in China, which I contend is not there, that we also take a look at the estimate of world ending corn stocks that exclude China. And in that regard, we saw USDA increase that estimate for the new crop season up to 4.18 billion bushels. Now, keeping in mind that Brazil's corn crop is still in play, I would suggest that the current season of 2021 to 22 is still the important season for world corn estimates, and that's signified by the red bar, that the current season has an ending corn stock estimate of just under 4 billion bushels. It's currently the second lowest in 8 years. So this continues to be a relatively tight supply of world corn stocks overall, and that's why Ukraine and the uncertainty of Ukraine means so much this year. Just before we move on, since we brought up the topic of Ukraine, I thought it's just as good a time as any just to mention how that snapshot looks right now. And I've compared here the export totals that USDA estimated today in the right-hand column versus the export totals that USDA estimated for Ukraine back in January before the war began. And just to give you an idea of what the difference is like because of the war this year. In the case of corn, USDA is estimating 354 million bushels of exports. That's roughly 27% of last year's figure. For wheat, USDA estimating 367 million bushels of exports. That's 41% of last year's figure. In the case of sunflower oil, most of the exports are expected to hold up, 88%, or 3.6 million metric tons. And in the case of barley, we're looking at an export figure that is roughly 30% of last year's total at 83 million bushels. So just to give you an idea of the reductions that USDA is expecting, at least early in the season. As we say, continue to say there's a lot of uncertainty and risk in those numbers, and it's hard to say just how things are going to turn out. Okay, this graph I always like to show, given that USDA is estimating roughly a 10% ending stocks to use ratio for the new crop season, what kind of corn price would we normally expect if we compare this year of supplies to previous years or the same supply levels were estimated? And the answer is $5.20 would be a historical comparison to expect. But as you can see, the blue dots on this chart represent past cash corn prices of the past 24, 25 years. And as you can see, they're widely spread around the red line, which means that there's a lot of variability in previous years' prices, even though they had the same level of ending stocks to use ratios anticipated. So I'm just pointing out that this is another sign of how emotional markets can be and how they can have a lot of influence from outside markets. And we certainly have a lot of influence from outside markets this year. The current national average cash price for corn from DTN's national index is $7.81. So obviously we're roughly $2.60 above what we would expect historically with this supply level. But given the war in Ukraine and contentions with drought and other factors this year, there's obviously a lot of risk in this as well. Corn shipments, how's the export pace doing? Well, we talked about that 50 million bushel reduction the USDA had today. Sales commitments so far down 14% from a year ago, and that's where I was saying the lag is. It's just not quite keeping up. USDA had been estimating a 9% decline in exports. Now they've reduced that a bit. Corn shipments, however, have been fairly close to their pace for the week. Before today's reduction, corn needed 42.5 million bushels of shipments each week. Now this will alleviate that by, let's see, roughly 3 million bushels. China. China's corn prices have been very strong since the fall harvest, but just in the past few weeks, we've seen a bit of a retracement from new highs. China's corn price is still quite expensive. It translates to $10.76 a bushel was the price earlier today for September corn on the Dalian exchange. So it still suggests that China will be a buyer of corn, but as of late, the strong push to higher prices has backed off a bit. So far, China has purchased 580 million bushels of old crop U.S. corn so far. So that's still a pretty good total for a country that hadn't purchased much corn before just a year or so ago. Boy, time flies. The basis in corn, I've tried to show you a little bit different look on the map here, and I understand it can be a little messy and the numbers are probably a little small to read, but let me try to help explain. First of all, DTN's National Corn Index was at $7.81 last night. That's up just 2 cents from a month ago, so it's been roughly steady over the past month. The cash basis is 8 cents above the July contract. That's tied for the strongest basis at this time of year that we've seen for the past 9 years. As if you can make out any of the numbers, most of the cash bids that you'll see on this map of the Midwest are roughly have sevens in front of them for the most part. There are some $8 prices in Iowa, Missouri, Illinois, along the Mississippi River, as you might expect. But the big total, or the big prices, are near the Texas Panhandle and southwestern Kansas, where drought has really been a tough problem this year. We see $9 and up bids for corn. So overall, $7.81 is the average. The basis remains very strong, a bullish sign of demand. Old crop corn spread, we like to look at the July-September corn spread, and we've seen just a phenomenal increase this week. Last night, it was trading around 42 cents above the September contract, and I should say the July contract was trading 42 cents above the September. That's a much higher premium than normal. Now, I understand this is not purely apples to apples because there is some early harvest involved in the September corn futures month. But typically, in most normal years, this July-September contract trades at, say, 5 cents or less, maybe 10 cents or less, typically. But this year, we're seeing a much stronger premium in the July, and I attribute that to very strong commercial demand and limited supplies. So given the strong basis we have and the big premiums we're seeing in the future spread, demand remains quite strong and quite bullish for old crop corn. The speculative positions really haven't been much of an issue lately. They've lightened up some the past several weeks. Corn had about a 2-week sell-off. But it didn't do much damage technically. The trend is still supported, and non-commercials have not really seriously been threatened. So we still have a very big speculative participation of in corn on the long side of the market, over 404,000 contracts. But as long as the fundamentals stay strong, as long as the demand stays strong and prices don't start breaking new lows, these positions have not been a threat to the market. Okay, let's take a breath here and shift now into what USDA said for soybeans here on Friday in their June WASDE report. Again, I'll start in the old crop column, which is the second from the left. And this is where we had our biggest concern of the day, that we were going to see an expression of tight old crop soybean supplies, and that's exactly what happened. As you can see, the arrow on the left shows a new export total of 2.17 billion bushels. That's up 30 million bushels from the previous month, and somewhat in line with how the sales have been going. There's still a question about if shipments will make it or not, and that'll be something to watch. But that 30 million bushel increase in the export estimate reduced the ending stocks estimate by 30, and so the new ending stocks estimate is 205 million bushels, and that's just under 5% of annual use. So we have a very tight market. It's actually the lowest ending stocks for soybeans that we've seen in 6 years, and it's even lower than last year's tight supply situation. Now, moving to the new crop season in the far right column, we'll see the lower beginning stocks total of 205 plugged in, so that's going to reduce estimates right away, and in fact that's the only estimate that changed for the new crop season of soybeans. So we also see a 30 million bushel reduction in the ending stocks estimate of 280 million bushels. The new average farm price of $14.70 is what USDA is estimating for the moment. The new crop season, the ending stocks to use ratio is just slightly above 6%. So we have less than 5% in the old crop, just above 6% in the new crop situation. As we look at the old crop season for world estimates, we do see some slight changes to note in the soybean crop estimates for both Argentina and Brazil, but it's almost, excuse me one second here. Yeah, it added just slightly to the expected soybean supplies. So Argentina's estimate increased from 42 to 43.4 million metric tons. That's in line with what the Buenos Aires Grain Exchange said on yesterday when they estimated 43.3 million metric tons. So USDA and Buenos Aires coming in line there on that estimate. Brazil's soybean estimate for USDA is 126 million metric tons. That's up one from last month's estimate, and that's slightly higher than what CONAB is expecting. Yesterday's estimate from CONAB came in at 124.3 million metric tons. So a bit of a disagreement there, but USDA choosing to err on the high side. Now, I do want to point out there was not a big change in the ending stocks estimate for the old crop total. But before we move on, I want to make the point that if we looked at the local marketing years in Brazil and Argentina, USDA's estimate of ending stocks according to their local marketing years would be 83 million bushels in Brazil and 87 million bushels in Argentina. That's a very tight supply situation. So I just wanted to point that out. Now let's move to the world numbers for the new crop season. And in the upper right corner, we see a slight increase in USDA's soybean stocks estimate from 99.6 up to 100.5 million metric tons almost. Basically, there was a slight increase in the beginning stocks estimate of the old crop season we just looked at, less than 1 million metric tons, so not a big bump from the old crop season. There was some things to note. Nothing changed as far as new crop estimates for South America. So Argentina, Brazil, Paraguay, all staying with the same crop estimates for South America for the new crop season. And again, these are crops that are not going to be planted for another few months. There's still plenty of uncertainty ahead for the southern portion of the world estimates from USDA. The last thing I want to mention before we move on here, China's import estimates of soybeans in the new crop season stayed unchanged at 99 million metric tons. Okay, as far as what price would we expect soybeans to normally trade at, given that the new crop season has a roughly 6% ending stocks to use ratio? Well, if we compare it to previous cash soybean prices that have been indexed for inflation, we would expect a historical target of $12.20 a bushel. Obviously, we're not trading that low. DTN's National Soybean Index for cash prices closed at $17.19 last night, so we're roughly $5 above the historical target, and for lots of reasons, lots of good reasons of things going on. And for one thing, we've never had renewable diesel as a demand sector before for soybeans, and that's something that's new to us now this year. So that's really added a lot of interest and demand for soybeans and has increased the valuation of the soybeans we grow. We also see a lot of interest from China on the export side, and we had a drought earlier this year in South America, which adds a lot of bullishness. So we're far above what we would normally expect if we were to compare soybean prices to the past. Soybean exports so far actually doing quite well. Sales commitments as of yesterday's weekly report were already 63 million bushels above USDA's export estimate. So that was a good reason for USDA to raise the estimate today by 30 million bushels, which is what they did. Now, before USDA made that adjustment, soybeans needed 21 million bushels of shipments each week. This should drop that roughly to maybe somewhere between 2 and 3 million bushels a week, or actually increase the shipments 2 to 3 million bushels per week. So that will be the big challenge for the rest of the year. Can we generate enough soybean shipments to meet USDA's new higher estimate? Before today, USDA estimated a 5% decline, so that obviously increased a bit from the 30 million bushel increase. China's prices, as you can see on the chart, when we talked about this a month ago, it looked like China's prices were kind of in a corrective mode, but they were holding support. Well, since then, the last several weeks, we've seen China's soybean prices start to push higher again, and that's also true for meal that you see here. So we have seen China come through a period where they're starting to ease their COVID-related restrictions in their cities now, and there is an anticipation that their economy is going to start picking up. The fact is, we never really did see, from as far as the market clues we look at, we never did see any slowing of buying from China through the COVID situation. And I think that was largely because of the drought that Brazil experienced earlier this year and the drought that Argentina is harvesting through right now, and they're almost done with their harvest. So those droughts in South America really protected U.S. demand, and we've seen very strong export demand this year because of that. So far to date, as of yesterday's weekly figures, China's bought roughly 1.12 billion bushels of soybeans from the U.S., another big purchase coming from China. The basis for soybean prices is somewhat varied throughout the Midwest. As I mentioned, DTN's national index of average cash soybean prices was $17.19 last night. That's actually up almost $1.50 from a month ago, $1.47 from last time when we looked at this. The cash basis right now is 40 cents above the August contract. And in fact, a lot of commercial bidders have shifted already from the July to the August a little bit earlier than usual because we have such a strong premium in the July contract. They were getting priced off the board. So to keep things a little more reasonable domestically, a lot of them had shifted to the lower August contract so far. But the prices that are being quoted around the country still 40 cents above that August contract. That's the strongest in 9 years that we see for this time of year. As you look across the bids on here, if you can make out the prices, and I apologize if they're too small to see, but as you would normally expect, you see a lot of the higher prices in Illinois, Indiana, near the Mississippi River. There's some $18 prices in southern Illinois and Missouri near the river. And then, of course, as you get out further west and north, you see cash bids of mostly in the upper 16 levels. So it's kind of fanned out from the usual high demand areas to the west. Full crop spreads. Again, this is a July-August soybean spread. Keep in mind they're only a month apart. And yet, as of last night's close, the July contract was priced almost 88 cents above the August contract. You know, just imagine that a commercial is so eager that they need the soybeans right now that they're willing to pay 88 cents a bushel more to get the soybeans now rather than wait one more month. That's the situation we see in the soybean market right now. So that's incredibly strong commercial demand for those that actually need the soybeans, and also a sign of how tight those supplies are. So I certainly support USDA's new estimate of 205 million bushels on the ending stocks. The truth is it may actually be tighter than that by the time we get to the end of the season. The soybean crush. We've been talking for several months, really ever since December. We saw crush values of meal and oil start to rise in relationship to soybean prices, and it's provided a very strong crush demand throughout the year. Crush demand estimates did not change in this report, but if you notice the blue line, that's the total value of the combined meal and oil that gets produced from crushing 1 bushel of soybeans. So that blue line has maintained its uptrend, and it's still quite expensive. $19.70 per bushel of soybeans crushed is the value of the crush, so that's still a very good enticement. But now if you look at the green line at the lower end of the chart, that's the crush premium, or the difference between the crush value and the cost of the July soybean. And what we see there is that the crush premium peaked in late April and has narrowed sharply since then. So it's gone from $3.44 now down to near $2 of premium a bushel. Now that's still enough to entice crush activity to continue, but obviously it's sharply lower. But the reason isn't because the value of the crush has collapsed. The reason is because July soybeans, old crop soybeans, have become so tight that the cash value of the soybeans has risen dramatically in relation to the crush. So again, we see another confirmation and reinforcement that domestic soybean supplies are quite tight and strong in demand. Speculative positions in soybeans have gradually lightened up over the past couple of months, but actually have not shown a lot of change. Net longs are still over 186,000 contracts, and as you can see from the November soybean chart here, those prices just continue to push new highs. So at this point in time, the speculative positions are no risk to this market as long as prices are making new highs. What we need to see if things start to get a little bit dangerous as far as selling potential is when prices start to break previous support. That's when the pressure turns on the speculators, but we don't see anything like that right now. Okay. Corn and soybeans under the belt. Now we move on to wheat here. Here is the U.S. balance sheet for wheat. We'll just look at the new crop season only, and we just look at one simple change, and that is USDA's production estimate for U.S. wheat production was increased by 8 million bushels. Not very much, but the new total is 1.737 billion bushels. That increased our ending stocks to 627 million bushels down at the bottom. And the average farm price stayed the same at $10.75 for the new crop season. So a slight increase in the production estimate. That was it as far as the U.S. wheat estimates were concerned. Not a big change. We did get a report from NASS, which broke down the winter wheat production estimates. And what we see here are estimates that were very similar to what we saw a month ago. USDA looking for 1.18 billion bushels of winter wheat. That's down from last year's 1.28 billion bushels. The HRW crop, 582, is down significantly, about 21% from last year. SRW wheat, 358, is very close to last year's crop. And white wheat is the one where we saw a bit of an increase today of 13 million bushels. It's now estimated at 242 million bushels, and that's up a bit from last year's really tough drought-stricken crop. So white wheat, winter white wheat conditions doing a bit better this year. But overall, not a big change in the winter wheat estimate from what we saw a month ago. In fact, last month's estimate was 1.17 billion bushels. Now we're at 1.18. So very, very similar. I just wanted to look. Now, keep in mind, these are old crop wheat supplies for the season that just ended on May 31st. So I just wanted to show that the ending stocks estimates for the various classes stayed the same as they were in May. 361 for HRW, spring wheat at 112, soft red at 107. No change in the old crop ending stocks estimates. Okay. Now we move to the new crop world estimates for wheat. And in the upper right corner, we see a slight reduction, not a big change, but just a slight reduction in the ending stocks total from 267 to 266.85 million metric tons. The changes to note and probably the most interesting areas for wheat currently, Europe, Russia, and Ukraine. In Europe, there was a slight reduction from 136.5 down to 136.1. Now, keep in mind, Strategy Grains recently had a comment that they were expecting roughly 5% lower wheat production in the current season. If that's true, that puts them down close to about 132 million metric tons. So would be Europe's view of their wheat crop this year. It sounds like Eastern Ukraine Eastern Europe has had very good conditions, plentiful moisture, but in Western Europe, that's where they've lacked moisture and are seeing a bit of a decline in the crop. In Russia, we hear nothing but good news as far as the wheat conditions, weather conditions go for wheat and for the wheat crop conditions. There was a slight increase in their estimate from 80 to 81. Now, again, I think I mentioned last month, there are private estimates out there close to, say, 87 million metric tons. So there is room possibly for that crop to increase as we move through the season. And then in Ukraine, where all the trouble is, we see that USDA kept its production estimate unchanged at 21.5 million metric tons. If we look farther to the right, we would also see that the export estimate for Ukraine stayed unchanged at 10 million metric tons. And I don't have that circled. Sorry, I should have highlighted that as well. But no change in the production or export estimate for Ukraine wheat at this time. And of course, again, that tends to be a very tough area of the world to make guesses about. World wheat supplies, as you know, my favorite indicator of world wheat supplies really is taking a look at the ending wheat stocks totals for the top 8 exporters. And those top 8 exporters this month are showing ending stocks totals very close to 2 billion bushels even. That's also very close to what we saw a month ago. This is the lowest total that we've seen in 9 years, and very comparable, very similar, almost the same as how the 2013 to 2014 season turned out. So this is not showing a dramatic reduction yet, but obviously the parts of the world that are suffering famine, that have a lot of poor populations, they're the ones that are going to suffer the most from wheat prices being so high and supplies being lower than normal. So that continues to be a very difficult and tough topic with the war in Ukraine feeding and exacerbating the food insecurity issues in the world. Cash HRW wheat prices, just comparing to historical prices, the ending stocks to use ratio that USDA estimates for the U.S. comes in at 33% of annual use. And if we looked at that historically, we would expect a targeted price of $5.80 a bushel, but here wheat is trading almost twice that level. $11.04 is the national index. So really it has a lot to do with the external international events surrounding wheat. And it's to me anyway, it's understandable all the uncertainty and nervousness in this market. So we wouldn't necessarily expect wheat to trade where it normally does, but we do like to keep tabs on what wheat prices would probably be in a more normal type market. But there's nothing normal about this market this year, obviously. The basis for HRW wheat, we're just starting a new season, so the basis doesn't really show up on this map yet anyway. But the new basis is roughly 50 cents below the July contract. Our national HRW wheat index at DTN closed at $11.04 last night. That's down 43 cents from a month ago, but again, it's also 50 cents below the July contract. This is the weakest basis we've seen in 5 years. So when it comes to actual domestic demand, this is almost the opposite of what we've seen in corn and soybeans. We do not see the strong urgency of commercial demand for HRW wheat anywhere near the type of activity we see in corn and soybeans. There just is no sign of commercials being concerned about not having enough HR wheat supplies available, even though our U.S. supplies are lower than they have been in quite a while. Kansas City wheat, the speculative positions have actually been quite stable through an extremely volatile market situation. And even in the most recent sell-off, we only saw light liquidation. So we still have roughly 37,000 contracts net long on the non-commercial or speculative side. I would say if there was any weekends, they got washed out in the past month. But the rest are holding in there quite firm. So as long as wheat prices are holding support, and so far they are, this speculative position is not a concern, but it could be in the future. But obviously it would take some type of anticipation that the world is going to be more comfortable with wheat supplies than we can see right now. In conclusion, before I read the concluding remarks, I just wanted to update you. July corn's up 1 1/4. July soybeans are down 23.5. Kansas City wheat is up 8, but Chicago and Minneapolis are showing small losses. So not a big impact on today's grain market board, and not a lot of big changes or really big surprises did we see. In conclusion, I think today's report could be called bearish for corn. Actually, slightly bearish is a better description. The ending stocks were higher because we did see a reduction in the export estimate. That was not a total shock to the market. We did also see an increase in Ukraine's corn production, but keep in mind it doesn't really help the world if exports don't increase, and those export estimates did not increase for Ukraine, according to USDA's view. For soybeans, it was a bullish report, once again, adding to a lot of bullish factors already at play for soybeans. U.S. old crop ending stocks fell to a new 6-year low, 205 million bushels now. Keeps a pretty small margin as far as soybean supplies in the U.S. World stocks were slightly higher, but not really much dramatically different. The ending stocks estimates, again, for Brazil and Argentina in their terms of their own marketing years are quite tight. Lastly, for wheat, I'd call today a neutral report. U.S. ending wheat stocks were slightly higher, but an 8 million bushel increase in the production estimate is not what I would call a significant price factor. World exportable supplies still at a 9-year low, so we know that overall we still have a tough situation in wheat. Before we get to the questions, I just want to point out again, if you haven't checked out our DTN podcast, I just urge you to give it a try. If you got some time on your hands, I like to listen to podcasts on long car trips or sometimes working, and these are pretty good. And Sarah Mock does a very good job. The latest one is an interview with our Ag Policy editor Chris Clayton. He talks about cattle price transparency and the latest changes going on in Washington. So these are just good ways to stay updated and get a little more in-depth discussion. So I urge you to give that a try. It's at our free website, dtnpf.com. Click the link for videos and then find the link for Field Post podcasts, and you'll see a whole long list of podcasts to choose from. All right, Andy, it's that time again. We had the first run through, but I'm open to any questions that the listeners have.
Well, Todd, you must have done an absolutely brilliant job. We actually have no questions that have come in. Maybe that's just because of the time of year and the nature of the report today, but nothing came through. So, unless you have anything else you want to add, we can complete the webinar.
I do have one more thing, because when we get to the question part, I always think we do have a listener that's interested in Canadian corn imports. And I
True.
forgot to mention that. I forgot to mention that they stayed the same in this report. 3.8 million metric tons was unchanged from last month's report, and so that issue, at least we covered that.
Awesome, awesome. Yeah, well, good deal. And with that, we will go ahead and thank everyone for attending and joining the conference today. As I mentioned at the beginning of the call, we will have a rebroadcast of this link up on dtn.com within the next 2 business days. So thanks again. If you do have additional questions, Todd has always been gracious enough to include this information. You see his email here, and I know that he's always happy to reply. So thank you, and we hope everyone has a great rest of your day and a great weekend.
Thanks all.